Hello, everybody. It's Jeff Gibby over at MetaStock. Welcome this morning. I want to say hello. Thank you for coming. Want to make sure you guys can hear me okay. So if you can and the audio sounds good, go ahead and let me know. Also, thanks for using MetaStock. Quick little question for all of you guys. How many people here actually came to the earlier session that we did? Thank you, Darnell. Thanks, Stephen, for the feedback on the audio quality. Appreciate that. How many of you here were here on the webinar we did Thursday? Patrick, only partially. Stephen, Jean, well, welcome back. Thanks for all of you that said you were here on Thursday. Hope you enjoyed the class. I sure did. Let's go ahead and talk a little bit about Rahul, and we'll let him get going. Rahul is, wow. How do we talk a little bit about Rahul? Rahul has been a partner for MetaStock for longer than I've been an employee of MetaStock. And on the 1st of March, that'll be 21 years. I think he told me he has been a dealer of MetaStock for over 23 years. So a couple of things about Rahul. The method that he talked about on Thursday was actually the first method I ever used to trade money. Used it for years. Shown it all over the place. It's an awesome system. If you missed Thursday's webinar, you should drop me an email and make sure I send you the recording. He did a good job with it. Rahul does a lot of interviews with CNBC, CNN, that kind of stuff. In addition to that, is a very likable guy. His main business, what he does, is he runs a training company in India, and they bring people in and they train people how to trade the markets. He's been doing that, like I said earlier, for years and years and years. They have a number of offices around India, and he's been a very successful partner of ours. I consider him a friend, and that's what I'm going to say about him for today. So let's go ahead and have him bring him on here. Rahul, how are you today?
Excellent. Thank you, Jeff. You always are so good with your introductions.
Well, I'm going to get out of the way. You've got the floor. Let's go ahead and move the keyboard over to you. How are you doing? What time is it in India right now?
Well, it's about 9:30 p.m., so all ready?
Stephen, while we're getting the screen up, thanks for the question. We are recording today's session, and I will have the email with the recording link out to you by Monday, or on Monday, I should say. All right, Rahul, I can see your screen.
Okay, excellent.
And I'm going to mute my microphone. I'm going to get out the way.
Thank you. Well, thanks, Jeff, and thank you everyone for being here, and especially to those of you who've also attended Thursday's one. I think this is going to be great continuity. But just for the benefit of everyone, those who didn't attend Thursday's session, I'd like to do a quick 5-minute recap on some of the core concepts we touched upon, which is the core inbuilt RMO system that you have inside of MetaStock, because I think that'll give us a natural continuity into today's session. So today's session is more about the ATM, but before I dive in, just to kind of expand on that little brief Jeff mentioned about my whole activities in India. Well, beyond a panelist on CNBC for over 10 years now, I'm really a full-time trader. I've been trading stocks, futures. My exposures are definitely not just limited to the Indian market. I still do trade international markets. So pretty much stocks and futures is what I like doing. And of course, options is something which I enjoy a lot too. So I'm kind of all into it. And above everything, I'm an active trader like probably each one of you are. So trading is what I eat, live, and sleep. So that's really it. That's as simple as it is. So, let's kick off today as a trader to a fellow trader. And I believe trading is a business. It's not a hobby. It's not a pastime. It's not something you do on the side. If you're going to do it like a sideshow, pardon my saying it that straight, you're also going to get sideshow results. So I think those of you here are here because it means something to you, because you believe in your business of trading, and you want to make sure that there's a relevant income from this business or return from this business. So with that said, and I quickly saw the polls that came up, it seems there is a vast majority of you that do trade stocks, and a vast majority of you within that segment look at US markets. But before I just keep harping on some of the US market examples, I'd like to tell you that my exposure is a lot even in Asian markets. So if you're someone who trades the Asian market, or if you think that, oh, will this system work on a market outside the US? Yes, it will. I mean, I use it every single day uh, in the Indian market, in the Australian market, both of which I very actively track on a day-to-day basis. So don't worry about will it work on this stock and will it work on that futures. It will. What time frame do I use the product on? Well, we have customers. I was just on the phone with someone who's been working with 2-minute charts for the last 2 years, and he was discussing some of his thoughts with me. So right up to people like me who use it on hourly charts and daily charts. So don't worry about what frame of time you like to trade on. Don't worry about which market you enjoy trading on. Above all, what matters is what's the rule set, what's the concept, and how do I stay disciplined on the rule set. So with that said, let's dive straight into what we touched on the previous session and take off from there as well. Now, before we dive into the recap, one quick bit on the ATM. What is the ATM? I must mention that the automated trend module. So that's what the RMO ATM stands for. The RMO, of course, is the Rahul Mohindar oscillator, which is inbuilt in MetaStock, and the ATM 2.0 is my latest add-on, which is a subscription add-on available with MetaStock. I think at the end, Jeff will help you understand if you want to sign up for the add-on or you already use it, or the different plans available. So having said that, I want to tell you the concept, what led me to develop the ATM. As I told you, I've been an active trader. I still am an active trader. That's all I do, really. That's my core business. If you look at trading, one of the biggest problems today is when you read a lot of theory, and there's nothing wrong with the theory. I mean, you read some of the classic Dow theory books, you see a trend line more like the one on your left-hand side where you have a nice little trend line, proper peaks and troughs, very proportionate. But when you come into the real world of trading, you see that everything is disproportionate. Pretty much like when we buy, we think it should just go straight up, but actually it doesn't do that. It goes all over but up. And then finally, when we're out, it sometimes goes up. So it's amazing how volatile these markets have become and how interesting they've become. And they've definitely become a very big opportunity. So they're definitely not most of the times in that theoretical fashion of an up move. They're more in the practical, real world fashion of an up move, where you see that there's a lot of jagged movement. Now, when I say up move, it goes vice versa. In other words, if it's a downtrend as well, sometimes it's a very, very sudden, steep downtrend, whereas sometimes it's more of an organized trend. So I believe largely 7 out of 10 times you're more into, or more for that matter, you're more into a jagged trend, which is why you need systems which can be very responsive and not static. So let's spell a little more into this concept. Now, I probably start by saying, let's give you a simple example like a moving average. So I'm sure a lot of you use a moving average, or if you don't, well, you may know that when you start with loading a moving average, you've got to pick a value. So someone says use a 200-day moving average. Someone would think use a 20-day moving average. Some people like a 50, some people even like a 5-period. So choosing a periodicity means you're using a value in terms of time to assign a moving average. Now let's say you're fond of using a 20-period moving average. So typically what that would mean is you use a 20-period moving average on every single thing that you trade. However, what we need to understand is there could be a different moving average that works well with a particular stock. and a different moving average that works well with another stock. So it doesn't necessarily mean that probably a stock like Boeing and Apple would move the exact same way. They have their own characteristics. Sometimes one is slow, one is fast. And I think in this current world of technology, we can definitely make use of tools which understand what's the right one to deploy and when to deploy it. That's the big thing, when to deploy it. There are times you need a slower moving average. There are times you need a faster moving average. There are times you need a slower indicator or a faster indicator. I just use moving averages as one simple example, but when I look at the ATM, it's a suite of many different studies which I've accumulated over time, which are based on price pattern movements as well as volume movements, volatility, and they all adjust. Nothing works off a fixed value. One of the things you'd notice is whether you use the SWI, whether you use the Breakout Catcher, whether you use the ATM RMO, you are not setting any value. It's automatically adjusting to the chart you are loading it on, right? So I think the real difference between the ATM and many other add-ons that exist or many other indicators that exist is everything works off a static value and is not adaptive to the current scenario. Now, I've used a lot of programs out there which use the word adaptive and optimized, but in the garb of that, what they do is they change the previous signals. In other words, it gives you a buy, but let's say the stock drops and it changes the signal. Now with the ATM, let's get this out of the way. It never changes the signal. So if it's giving you a blue bar or a buy arrow or a signal to go long or short, it stays. It never ever changes, right? So that's something we locked in, that even though it optimizes every day and adjusts every day, we're not going to change any signal that came on. We're not going to change any drawings, any values that come up on the indicator. So that's something very important because that's only what's going to give you the confidence to rely on it, right? So the ATM is a suite of indicators and templates and explorers that you get inside of MetaStock as an add-on. And plus we have a Power Screener app, which I'll talk about. But as the name suggests, Power Screener, it helps you screen the market. It helps you detect opportunities and scan through absolutely click-free. So the idea of giving you a model like the ATM is to get you methodical, rule-based, and above all, I think this is where the crux lies, to give you systems which are a breakout, a counter trend approach, and to give you systems that can even handle a sideways zone, right? Because either the market's breaking out or it's typically reversing or topping out or bottoming out, or it's consolidating sideways zones. And I think why you need to know sideways is because A, you need to understand, is it a consolidation or a distribution? And more importantly, if you know that you're in a choppy sideways zone, you also know it's wiser not to trade there if you're looking for a biggish trend, because that's where most of the whipsaws happen in most trend following indicators. And if I could help you with that in terms of understanding where the sideways zones are potentially are, we would not be putting too much of money on those sideways setups. So this is what I mentioned. It provides the benefit of a lag and the responsiveness in the case of a sudden market movement. So there are times you'll see, and I'll show you this with real examples with up-to-date charts, where you'd be able to see where there is a point in time the indicator was very slow and then it's suddenly become fast. Or for that matter, there was a time when it was very fast and now it's slowed down because it's adjusted to the market. If the market slowed down and the chop's gone up, the indicators also must self-adjust so that you don't get a lot of whipsaw. So I think that's the beauty. That is what we need when we trade today rather than working off static stuff. And I think that's what creates the difference. Above all, you need something which is very simple and very efficient, something which is not very laborious, because that's what's going to help us take out the emotion of trading. Because half the problem lies when we are manually looking at 10 different indicators. Even if 8 tell you to buy, you'll end up saying, oh, those two which are saying a sell, that makes sense because your heart may be thinking those stocks are going down. You follow your heart more than the indicators. So you kind of bend, twist, and turn when you try and leave it as an artistic flow. So let's try and make this efficient, rule-based. That's what we need to get at, and that's what will help us get our returns, right? Now coming to the recap of Thursday's session, we talked about the RMO, which is the green oscillator inbuilt inside of MetaStock. You right-click and apply the RMO trade model. We understood it helps us establish the primary trend or the long-term trend. We also understood we take trends in the direction of the primary. So which means if long-term a stock's looking bullish, you're trying to use every opportunity for buying into that stock. You're not looking at where to sell that stock. The reason you buy into a long-term bullish stock is because it increases your odds of winning, and above all, it helps you trade in the direction of the stronger force. As I cited the example in the last session, if the river is going upstream and if you are also going upstream, that's going to be in the direction of a stronger force. It'll require much less effort, will be more efficient, and will be more rewarding. So don't fight the tide, in simple words. Have a picture of the big trend in place because that's what gives you some foresight. So what we talked about was the short term, medium term, and long term. We said the short term are plotted in the form of arrows. So every time there's a short term trend detected, so that's a blue arrow or a red arrow, that tells you the short term. And the colors come in after that. The red bar colors and the blue bar colors represent the medium term. And right on top is my long term. So in other words, short term, medium term, long term. I've got all three elements on this chart. Short term comes through me with arrows. Medium term comes to me through bar colors. Long term comes to me through my RMO oscillator right on top. Or if you look down at the x-axis ribbon, that's a lovely ribbon to look at because that stamps for you RMO bearish or bullish. What are we looking for? We're looking for an alignment of the red bar, the red arrow, and the point where the RMO first turns bearish. So we talked about the importance of trying to use that first breakout rather than the second and the third and the fourth, which are more add-on. You can still use it, but that's being very mechanical. That's being slightly lesser focused. If you can catch the first breakout, those are the most juicy and the best breakouts, the most potential breakouts that you could use. Now, what's the advantage of using this? Now, I don't mean to run down any indicator, but the reason I've put up an RSI and a MACD is simply because a lot of people like to use these indicators and they like to use them mechanically. So when you look at the MACD buy and sell, even though this looks like a nice downtrend, these little peaks and troughs where you have this 1 month patch where it gets sideways or choppy, you get a buy, then you get a sell, then there's a buy, there's a sell, and by the time you're in and out, you're kind of rocked through the trend so much that you're not even participating. And I think the other big thing to keep in mind is the fact that when you look at something like the RMO, it helps you stabilize and understand in one click what the trend direction is. So the idea of using the ATM or the RMO is to smoothen out data. Like for example, you can see the positive divergence on the RSI, and you can keep drawing the divergence from here to here, then you can keep extending it. So nothing against it, but what people tend to forget is that when you look at some of the newer age indicators and the systems that I'm talking about, it kind of helps you wade through a lot of these situations and go above the water on this. So we've done enough testing, enough work to make sure that we're better than the conventional stuff out there. In fact, I've used so many indicators, so many add-ons, and I continue to keep working with my indicators simply because I I benchmark it, I back test it, I use it practically, put my own money on the line, uh, you know, across the globe, and I found that there's a lot that one can do out of it. In fact, I go out to the extent, and probably if you've attended one of my live seminars, I always say this: you've got to try hard to lose money. You got to try hard to lose money. You got to be that indisciplined and that fickle-minded in terms of time frame, uh, that inconsistent to keep changing. And I gave you this example on Thursday when I said most of the time when we look at a higher time frame, it's because you started losing money on your original trade. You looked at a daily chart, you started losing money, you look at a weekly. When the weekly goes wrong, you look at the monthly. And there's just a self-fulfilling prophecy, right? We need indicators that are adaptive. We need indicators that handle short-term, medium-term, and long-term, so that we can stay focused with the same rules on the same stock for 10 times in a row, so that you realize, am I 6 out of 10 correct, 7 out of 10 correct, whatever it is, right? So that's really the core. And I keep urging you to stay focused on your time frame, stay focused on your stock, because don't keep changing the stock or the time frame. You won't realize consistency, right? If you see that everything in the past works beautifully and you say, well, in the future it didn't work for me. Well, it's because in the future you were 2 months on Walmart and 3 months on McDonald's and 4 months on Apple, and you kept moving in between these symbols, for example. So don't keep jumping around on the stock. If you've decided this is my universe of 5 or 10 stocks, and this is my universe of indicators and rules, work with that with a focus, and I'm very positive you do very well with it. A guy like me doesn't have a TV set in my office. I don't feel the need to watch television while trading or while I'm tracking the markets. I think it's a very peaceful and relaxed process. So keep those thoughts in mind, that uh, we need to have that consistency. We need to have that conviction. Now, moving on to the RMO again. So we covered the blue bar buy arrow concepts here, and that gives you the 3D buy when all three line up. Now, obviously, a lot of people wonder what happens if the market's not very trendy. What happens when there's a lot of chop? Now, when I built the ATM RMO template, which is what I call the super filter, right? The super filter is a filter to the existing RMO out there. Think of it as the adapted RMO. In other words, the RMO that is self-designed for the chart that you're using. It's amazing how it works. So here's a quick example. Take a look at this patch where the RMO went. Well, it's easier when you look down at the x-axis. RMO bearish, bullish, bearish, bullish, bearish. So there's a lot of turn here. If you're looking at the oscillator, you can see bearish, bullish, bearish. So that little chop that you see, the little whipsaw that you see, yes, maybe you can filter it out looking at, I'm going to concentrate on first breakout. I'm going to concentrate on the volume. But I think what the super filter does is it's beautiful. It marks these bars red and orange and gives you a wonderful clarity that even though the RMO is bullish, I am still orange. Red is a form of weakness, a very strong form of weakness, and orange is also weak, right? But it's probably a smaller form. But net, if I'm seeing orange bars, despite seeing a positive RMO, I'm not going to do it because this is the adaptive, this is the optimized, right? So I'm not going to do it. So keep that in your mind that if I'm going to trade, I want to make sure that I have, so what am I doing in this simple 20 or 30 bar phase where I'm just going chop, 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 chop up and down? You can see over here, I'm red and orange all the way, which means the only thing I'm thinking is where to short. And I'm not worried about this going from bullish to bearish, etc. So you can see how that optimization is powering on. Now, the other advantage is when you have dark blue and light blue, you start understanding transition. Likewise, you see all of these are dark red bars, and towards the end, you start seeing some orange. You start understanding the transition. It helps you sometimes in profit taking. It helps you understand the potential. So when I had the first breakout on dark blue bars, I'm very excited. But if I'm having a move from dark blue, I start plateauing and I see light blue, and then they move into a dark red, I know there's a problem, right? Now you can see over here, it also comes in a little earlier. Look carefully. These red bars came in much earlier than the RMO went negative, a good 25 bars beforehand. So there you can see that in the optimized or the ATM RMO, what I call the super filter for short, the super filter signal comes in much earlier, and you know that that's the point where you can actually go short. So I get the question, are you simply saying that the ATM RMO is better suited for the stock? Yes. I would like to follow the super filter. Well, of course, if you follow both of them together, that's also good, because a lot of us do get comfort when two agree. But I'm quite happy just looking at those red bars and getting my first feelers. And when both of them come in, I go and kick it all the way through, right? But I think the first feelers you get, now you can also see that here the indicator was very fast. It gave you the sell maybe 20 bars before the RMO went down. But what about here? When the market broke out on the upside, I'm talking about, say, November, December, over here, January, you've seen steady blue bars, dark blue, light blue. The nice thing is they're all blue bars. And this little chop that you see at the bottom of green going to red, green going to red, that's all taken out. So you can see here the indicator was more stable. It slowed down. The indicator slowed down so that you didn't have to experience chop. So I think that's what we need to understand, that the adaptive models, the optimized models obviously give you that edge. And it's a very natural progression, which is why I did that recap of yesterday's session, because once you understand the core RMO, and when you move to the ATM RMO, it's beautiful. That transition is just so much better. Look at this over here, another example. The reason I'm taking so many examples is I need you to understand what it's doing. Dark blue. Here the RMO is negative. So in other words, the blue bar gives us an early indication of trend change. So I've got the first hint that, hey, I'm going to go RMO positive in all probability, and that's my first hint, right? And here the RMO goes negative, but I'm still light blue. I don't have the conviction to short this market, right? So it saves you from this little chop that you see. You might as well wait for it to be red bars. So notice over here, the RMO went negative much before the original RMO, whereas the adaptive or the optimized or the super filter comes in later. So it's late over here so that it saves you from this chop, but it's early over here to give you the lead. So I think that's the fascinating thing. And these are not manufactured charts. This is stuff that's actually going on. For example, this is a chart of the E-minis, or the ESC1 to be precise. Now, when you look at what's happening on the E-minis, and this is, I reckon, a 30-minute chart, if I'm not mistaken, you've got the red bar that comes in right there on the 13th. So somewhere midday on the 13th of March, which is probably just 4 business days ahead, we got the sell signal. And now you could wait for the RMO to turn negative, which means waiting all the way till here or somewhere there. So you can see how that responsiveness gives you that edge. And when you couple it, you got good volume on that signal too. So you're really pumped up about it. Now, the other thing which it saves you, I've drawn about 5 different arrows at the bottom just to help you understand the RMO went bullish, 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 so many times there. Now, I know you could save yourself from these bullish zones looking at the volume, etc. But the fun is when you look at 30 or 40 bars right there. That's not easy. That's where all the chop comes in. 40 bars of just chop, 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 chop. No big trends here. And you can see I'm red and orange, so just take it easy. Continue to believe that the market's down. You don't get chopped into these little green patches on the RMO that come in. So use technology to make things so much more easier. I mean, the fun thing is it took me so many years to get the optimization, because I'm someone that doesn't just release an upgrade. I mean, the ATM was around for a good number of years. The original ATM before 2.0 came out in Jan 2016, the ATM was around for probably 4 or 5 years, if not more. And really to upgrade something which was already so good and better than most of the stuff that I've been looking at, it was a very hard job. And I felt that if I'm going to do an upgrade, I'm going to make sure it's meaningful, because I'm not here to just do an upgrade for the heck of it. I mean, it's not something on my agenda to give you an update every 3 months or 6 months or 1 year. I want to make sure that an upgrade is an upgrade, right? And it transponds into genuine trading efficiency. So I think I'm trying to tell you that there's been a lot of legs that have gone in to hone the same solid system to make it even more solid. And these are real charts. I mean, just think of what's happening. That's not an easy E-mini chart in front of us. That's a really choppy 45 bars. That's an uptrend where probably every MACD or moving average would have broken out of. Well, even the RMO went up, and you get into that little mold thinking that, oh, am I all messed up and should I go long and will this change? But the orange bars kept me steady in my thought process. So it's beautiful how in the entire phase from midday of the 13th right up to the 16th, you saw. Now, when you see that, okay, I've got some dark blue and I've got the RMO going up, I want to use the high of that bar. So I'm not too sure what that is, but I reckon that's about 27.55, 56. If that goes through, you think of it as a buy. Well, of course, you need to update the charts. I've just taken a screenshot till the point I was working on the presentation. Now, another very big advantage you have with the ATM RMO Superfilter template is the fact that you get comprehensive commentary. So you can just right click on the chart and ask for commentary. And it tells you that, hey, this is what the breakout catcher says. Now, the ATM's got so many different indicators, but today I'm here to really focus on three of the indicators I use primarily a lot, and three of my most, go-to indicators. So those are really, if I had to say favorites, that's the word I could use. So the ATM RMO template where I'm showing you the super filter is just one of my favorites. The fact that it smoothens my my original RMO and just makes me so efficient with that longer term trend direction. So all of this, the SWI, which is a volume-based indicator, which I'll talk about, the trend decider or TD, that's another really good momentum-based system that I originally designed for an institution who looked at a risk management module, and it's really those institutional guys who told me how they were using the same indicator to roll into trends and roll out of trends. So it was amazing with the feedback that I got, and I realized that you know there's great potential if we used it that way. So the trend decider, the strength weakness indicator, the zone detector, because the zone detector tells you if you are in a fairly active zone in terms of price and volume. And then for those of you who trade options, which is something I definitely love doing, is look at the ATM RMO 2, right? And that tells you. So one read tells you the breakout catcher is bearish, the trend decider seems like a corrective down move. The strength weakness is bearish. The zone detector tells you I'm active. The RMO2. So it's quite solid. It's quite solid. Just one look tells you the super filter color, and that's what I really want you to look at. So the commentary is quite comprehensive, kind of the stuff that I would go to first. So definitely worth using the commentary, especially for those who've just started out with it. You get 10 different chart indicators, yes, breakout catcher, zones, counter trend. So today I'm going to talk a lot more about my trend decider suite and the strength weakness indicator in a bit. But I have to kind of just do a quick touch on the breakout catcher. It's one of those very popular indicators out there on the ATM. So whilst I'm going to focus a little more in a bit on the other two, the breakout catcher marks very straight cut lines for you. So when you apply the template, this is exactly what you get. You get red bars, blue bars, and khaki colored bars or olive colored bars. The olive indicates a neutral price action. Red indicates a bearish price action. Blue indicates a buy price action. So it also marks a vertical line so that you can see it very easily. So what's so different to what this indicator is offering you to a lot of other breakout styled indicators that you have? It's really what you see on top, this zone detector. When you look at that zone detector, there is a phase of the market that's dormant or not very active. So when you see the zone detector at a value of 0, that means don't take a buy trade, right? Or don't take a sell trade because that's choppy, it's sideways. Maybe it doesn't have enough volume or volatility. So it's measuring volume, measuring volatility, measuring whether the market's likely to move, not move. So if you can see you're in a dormant phase, don't take a signal. No matter what setup you use, don't try and trade a dormant phase in the market. So when I get the buy, when I get the blue bar and I look up and I see, hey, there's a hyperactive. In other words, when I've gone to a fluorescent green line and a value of +1, I want to take the buy. But when I get this sell here, I get the red bar but I look up and I see that it's flat at the value of 0. If the zone detector is at 0 or dormant, I am not going to sell here. I'm not going to short here because that could be a choppy market which doesn't have liquidity. Pretty much like here, don't buy here, don't buy here. Look at that. Don't sell this, okay? Don't buy here. You concentrate where to buy here, here, sell there, okay? Because you're looking at that red bar and that hyperactive. So it's beautiful how it does that zone detector and walks you through it. Okay, but just in case you're interested in the internals of it, active is when you have the value at 1, that's the zone detector, and 0, when it's at a value of 0, it's dormant. And hyperactive is when you have the zone fill. In simple words, the fluorescent green histograms inside the zone detector, if that exists, that's a hyperactive phase. If it's just white and still at a value of 1, that's active. All right. So active and hyperactive is what is tradable. Dormant is don't take the trade. Okay. It just tells you that the probability of most trades, and this is something I like using with almost any indicator I trade. I like to look at, am I trading or taking a signal in a dormant phase? I would definitely avoid that. So even when I sometimes get my RMO set up, I want to make sure that I'm getting it in at least an active phase, if not a hyperactive, right? So I don't want to take trades in a dormant phase. So that's what helps me a bit. Now, in simple words, all it means is when you get a buy signal, just look up. If it's dormant, don't do it. If you get a sell signal, go look up. If it's hyperactive, go do it, right? And likewise, same rules. You want to make sure that when you get a blue bar, you want to buy above the high. If the high is not crossed, you're not buying. So like you see this one solitary blue bar, you cannot buy because A, it's dormant, B, it doesn't cross the high. So that's the breakout catcher. But folks, if you want to learn more on the breakout catcher, in a lot of my ATM studies, there's a whole ATM manual that you get with the product, which I've written for you with the illustrations. And of course, these videos can always be relooked at once Jeff sends you those links. And yes, I do have some older webinars too, which you can cross-reference. So ATM handles volatility fairly well. That, it brings me back to that adaptiveness concept. Here's a point where the market's got very wide in terms of its bar sizes, very choppy, but you can see how the ATM stayed steady, not chopped you out here on trade. You got the blue bar here, dormant phase, doesn't chop you out. But that whole responsiveness, is what you need. You need that adjustment in indicators. You need to, pretty much like when you're in a car, you've got to drive a little differently when you see a hill, and you've got to drive a little differently when you're on a road that's got multiple slopes. So it's all about handling these multiple slopes depending on the gradients of them a little differently. So that little tweaking is what makes a world of difference. So all of this is automated. All of this doesn't require any manual intervention. Every template is given to you. Every scan is pre-built for you. You don't need to select a value even for any of these indicators. Now, one of the ones that I love using, and particularly since I'm more of an hourly chart guy, I really like using the TrendDecider suite. Now, the TrendDecider suite is a suite of the TrendDecider daily, weekly, and monthly TrendDecider levels. Now, let me clarify one thing over here. If you are someone using a 5-minute, 15-minute, 60-minute, any kind of minute interval, you would definitely like to work with the TrendDecider daily and maybe the weekly. But if you're someone who's looking at a higher frame, let's say you only look at daily charts, okay? So let's say you're an end of day user, you don't have access to the 60-minute charts. If you're an end of day client, try and use only the weekly and the monthly. Don't use the TrendDecider daily. Yep, don't use it. If you're using the TrendDecider daily, it's got to be on a time frame less than daily. If you're using the TrendDecider monthly, it's going to be used on a chart with a time frame less than monthly. Likewise, TrendDecider weekly needs to be used on a time frame less than weekly. Don't plot it on a weekly chart. So I'll come to this in a bit with some illustrations, and that would clarify it. But each TrendDecider indicator gives you a single level of support or resistance. So in other words, if I'm trading just for one day, and let's say the value of the TrendDecider daily is $100. If the stock's trading above $100, I believe that day is going to be bullish. Likewise, if it breaks $100, I expect it's going to be bearish. So it's like a key level for the day, for the week, and for the month. Now imagine what could happen if all three of those levels get taken out. Imagine if two of those levels get taken out. When you look at that on a chart, it's amazing what it can do. So this, for example, let's start with the easiest form. I've just made this a line chart just so that it's easy to understand. This is an up-to-date chart of the DJI or the Dow Jones Industrials, and it shows your index on a 10-minute chart. Now, it doesn't matter if I used a 5-minute chart or a 10-minute or a 20-minute. The TrendDecider Daily or TDD is going to be based off the daily chart. It's going to use the daily chart for its calculations and give you a level for the day. Notice every time the price goes past the TrendDecider daily level, you have an upsurge. If it breaks that daily level, it's weak. So if you're someone just trading in the day, you go above that daily level, you see bullish. You come below that daily level, you again get into a bear phase. Get above the daily level, you're bullish. So a very nice thumb rule to use even as a day trader or someone tracking the market just for one day. That's the TrendDecider daily. But that's a very short-sighted way to use it, just looking at one level. I think the fun is when you start combining. The fun is when you understand the integration, and that's what's going to take us places. Let's look at a weekly chart. So now I'm looking at the same Dow Jones Industrial with a weekly TrendDecider level. So here I can see that, well, this of course looks like the big January end run, and then that's February, no guesses for that when it just toppled, boom. So you can see it's been stepping. Think of it like a fleet of stairs that has always been going up. Price has been trading above the TrendDecider weekly level. That's the first time the price threatened the weekly level, right? That area, and that's when the drop starts. Again, goes past the weekly level, you're bullish for the week, bearish for the week. You can always have some chop, but you can easily get rid of the chop when you combine things. But just look at that one level. That one level gives you such a nice insight in terms of, am I bullish for the day, bullish for the week? So the red line indicates the TrendDecider weekly level. The green line indicates the TrendDecider daily level. Now, if I put both of them on together on that same, well, this is not the same chart. This is a chart of Google. If I put it on the same chart, a similar looking chart, that's how it looks. So if you look at Google, let's start by just concentrating on the red level. It's always been above the red. It's always been above the weekly. That's where the level, the daily and the weekly both punctured right there. And see what we got. She fell all the way down. That's where the price closed above the daily and the weekly. And remember, this is not a daily chart. We're looking at probably an hourly chart here. And the minute you see that it's closing above daily, closing above weekly, you get that nice movement. You break down the daily and the weekly level, drop. So that combination is just amazing. And as I told you, I originally designed this system to be a risk or a trailing model for an institutional trader who were position based, because they felt this gets them out of the trade the best. And they eventually landed up using it as an entry model. And I have to say that was the driving force of me looking at this even harder. I just thought it was a simple trail model. And today it's my go-to indicator. So honestly, if you asked me, if I start using the ATM suite, what are the two things I would recommend you look at? I want you to look at the Superfilter and the TrendDecider to start with. But just remember, if you're going to use the TrendDecider daily and weekly together, you need to use it on an hourly chart or maybe a 2-hour chart, because TrendDecider daily needs to be looked at an interval less than daily for optimum return. If you're going to plot a daily level on a daily chart, it's not going to be as interesting at all, right? You're probably better off looking at a weekly level and a monthly level if daily is your time frame, right? Now here's another chart of the E-minis, and you can take a look here when the price is trading above the green and the red. So look at that. Price is below it, goes above it. Now, how do you save yourself from chop? You might be wondering, how do I save myself from areas like this? It's gone below both. Notice one thing, if the green line is above the red line, in other words, the green is the trend decider daily level. If the trend decider daily level is above the trend decider weekly level, it's really nice and up, right? So even if the market goes below both, don't worry. We're looking at, is the green line above the red line? So all I'm trying to tell you is there are three rules. Just concentrate on my mouse pointer now, the three rules I'm going to look at is, am I closing above the daily? Yes. Am I closing above the weekly? Yes. Is the green trend decider daily level higher than the red weekly level? Yes. Then that's a go ahead, right? So trading above daily, trading above weekly, and the green above the red, that gives me an absolute confirmation of strength. Likewise, if the green drops below the red, there she drops. See, it's not a competition of trying to get that peak. It's the competition that even if I got it later, I've got a nice smooth trend, and you save yourself from a lot of whips. So, I mean, this is real up-to-date stuff that I'm showing you. There's nothing that I've manufactured here. There's nothing that I've saved with 10-year-old examples. I love doing things as they are in front of me, and which is why when I do my live training sessions, I always do it with uh, ideally in a live market or with current up-to-date examples, right? So if you can learn one thing, that if green is below red, it's bearish. And if price is trading below both the daily and the weekly, it's bearish. Now, if you're thinking that this is complicated to start with, just remember, we've got an expert ribbon right at the bottom that what you see bearish. It's automatically factoring in the three rules that I just taught you. It's looking at the fact that, okay, over here, the closing is less than daily, closing is less than weekly, and the green line is lower than the red line. Once all three are in sync, it'll mark bearish. Notice there's a patch over here which is gray. It means it might be above the daily, but it's still below the weekly, right? So what you're looking at is still looking at continued weakness, and the way to go is continuing to be down, because if the green's lower than the red, you're still weak. Now that purple line, well, of course you can change these colors around. That's what I'm used to using these colors with. That's the defaults. That's the monthly level. So if you can see right here, when I turned bearish, probably in that area, I was not just below daily, I was below weekly and below monthly. And the monthly just, you get one more heads up. I mean, I personally like to look at more of just the daily and the weekly. I don't like to sink in a lot of the monthly, simply because my trade horizon is not very, very long term. I like to be more of an active trader. And that doesn't mean I'm a 5-minute guy or a 15-minute guy. I still like using my hourly charts. I still like looking at daily, but I don't really like to look too high up. Right? Now here too, more than just the markings at the bottom, we even have an expert commentary, which tells you the trend decider level. It combines that for you. So look at the expert, look at the your ribbon at the bottom. They're all there to guide you. So don't worry, this is very easy to use. It's very visual. You can see that it's something which doesn't require you to do a lot of interpretation, because you've got all the aids in terms of commentary as well as actual ribbon markings coming up for yourself. Now, all of those were price-based tools. That was using the daily, weekly, and monthly. But when you look at the SWI, this is a volume-driven indicator. Now, obviously, I must mention that if you're using something like the SWI, I cannot necessarily use the SWI on an index, because an index sometimes is just the spot index. It's not a traded index. It doesn't carry volume data. I can understand, I look at it on the index futures because that's actually trading and that has volume data. So when you look at an index, you probably want to look at index futures because that's going to carry volume data. So you need to look at stuff that has volume data. But, well, if you're looking at your Apples and Googles and all of that stuff, well, obviously that all carries volume data and is really traded. So just a word of caution for an index. Or for that matter, if you're looking at FX data, you want to make sure that carries volume data. So just bear that in mind. The SWI, or Strength Weakness Index, is measuring strength and weakness purely out of volume data, right? That's how it looks on a price chart. It's a red line that's plotted on the screen, and there are templates provided to you. So if you're wondering, how do I get the SWI up? Just right click on your chart, apply template, and select ATM SWI. Now, why do I like this? I've got a lot of nice stuff going on with the price. I've got my trend decider indicator, which is a price-driven tool. And the beauty of the trend decider indicator is, even though I'm using an hourly chart, it's taking the cues from the daily level, weekly level, monthly level. I don't need to look at different time intervals. I'm looking at one chart, one time frame, focused. And the trend decider has done the job of looking higher up, getting the right levels for me, and pasting it on my hourly chart. So that's what we need to keep in mind. Now here, this is another beautiful tool in the SWI. This is measuring the movement of volume. So it's trying to see how volume is moving in terms of the trend, and then plotting this line. Very simple. If the bars are below the red line, the volume indicators are pointing weakness. If the price is trading above that red line, it's indicating strength. Now, how is it measuring it? It's very hard to get into the granular bits, but let me make this very simple so that you understand the concept. I'm pretty sure you've all read somewhere or heard somewhere or believe in this, that if price goes up with volume, that's definitely a confirmation to the uptrend. Likewise, if price goes down and volume also increases in the decline, it's a confirmation to the downtrend. So price is confirmed by volume. So how is it kind of displacing? It's seeing what's the kind of volume it clocked on the uptrend and when that volume is broken. So if the price has dropped and it's kind of toppled over the volume balance, then it's giving you a sell. So it's a beautiful way to marry in a conventional concept of, is price going up with volume or not, rather than looking at the volume and trying to strain the eye. This is a more efficient mechanical way to do it. Now, I honestly don't use the SWI alone to take a trade. It's one of my trade monitoring tools, like the trend decider and the SWI. I think when you couple that up, they work so beautifully, because it's multi-time frame analysis, actually just on one single chart with that trend decider. And then you've also combined that price-based analysis with something which is so hardcore volume in that SWI. So it's a wonderful combination as well to be using. And it's so easy to use because we've got experts and bar colors. MetaStock makes it so easy for us to mark these colors and ribbons and aid us in our trading. Because I really remember 20 years back when I started out trading, there was a time I started plotting charts for my dad with hand-drawn charts. Those were the days when the calculator was just about starting out. There was a facet machine even that I did see. Well, fortunately, when I was there was an XT by that time. But honestly, what MetaStock does for us is just amazing. What technology is doing for us today is amazing, because to even calculate a simple moving average earlier was a painstaking process. So we don't appreciate what we get sometimes. And the reason I keep saying this is, I cannot just thank my stars for having such great tools at easy access and with one click of a button. Now, the biggest problem is when you have too much of it available to you, and this is where the problem comes in. And I keep telling people that if you look at my indicator list in MetaStock, there are about 10, 12 indicators. I've deleted a lot of the indicators because they have a nice feature there to edit your indicator quick list. And I know Kelly does a great job in showing that, probably in one of his videos. Probably it was Unleash the Power, if I'm not mistaken. But yeah, you can do stuff like that and narrow down that indicator list to help you stay focused. Narrow down your stock list, stay focused. Narrow down into one time frame, stay focused. Because till I do 100 trades, same rule, same stock, how do I know I'm 68 out of 100 correct? Or whatever that number has to be. So staying focused is the core. Being disciplined is the core. If the reason is we have so much of an information overload, it becomes hard for us to sometimes become successful, because all of this is just helping you change your mind and get more and more fickle. So remember, if we are disciplined, we all can do wonders. It's about staying disciplined. The technology is all there. When you look at the past data, it's all there. It is going to be all there even in the future data to a strong likelihood. Whilst we always say there's no guarantee, but well, of course, you know it. If it's been done it for years and years, deep down, you know that it's probably going to be there. It's about, will we be there? Will we have the conviction and that continuity? So give that a hard thought, friends, because I speak from the heart. I speak to you as a trader to a trader. It doesn't matter to me whether one program sells or two programs sell. For me, what matters is I need a happy customer. I need a happy trader. I need a successful you, because that's what I'm off, right? And that's what matters to us the most. So when I show you this stuff, this is stuff I really use every single day, right? And just imagine you've got all the commentary to help you with to start with. And plus, I haven't touched on it, but the explorers, they're amazing. I mean, you have a scan for everything. You can scan for the first breakout catcher buy. You can scan for the first RMO integrated buy or sell, where all the three signals have aligned up. You can scan for the SWI signals. So all of this is totally scannable. And, in the pro class that's coming up, which is my third and final session, which is a users only access class, I will go over an app called the Power Screener. The Power Screener is an application that I built, which works with both end of day or offline and online data. It was first only working with online, but now it does work with offline as well. It does an automatic scan for you and tells you trading signals. So you can see, I can make a stock list of my choice, put in stocks I'm trading, and put in columns like ATM BC is the breakout catcher, the zone detector, the trend decider, the RMO, the RMO2, enter positions that I'm trading, see my live profit and loss. It's my go-to screen. It's the screen that where at one glance I can see, is there a new buy or a new sell? So for example, if I see an RMO 3D buy somewhere, and of course, this is just a slide which I probably saved many, many months ago. So don't go by the exact numbers and signals you see there. But yes, we'll be doing that in tomorrow's, well, not tomorrow, well, on 22nd, when we do that master class, or the pro class as I call it, where we'll show you some with the updated stuff. So the RMO 3D buy guides me that, hey, you've got the blue bar and the buy arrow and the RMO going up. So all of this is automated. Now, the reason why I built the Power Screener app is because I am then not relying on you to run an Explorer, right? I'm not relying on you to run an Explorer. This is automatically running tick by tick live every second on stocks of your choice, on time frames of your choice. So you could have one column which runs on a daily, and you can see this column I'm running off a 10-minute chart. So you can have each column work to a different indicator, to a different time frame. So it's so customizable. I mean, I've thought to the nth degree. And another reason why I needed a scanner like this was because I often got this feeling that, hey, what if I missed running the Explorer? So this way I can never miss a signal. I can never forget to run it because it just opens and it throws signals at me. Plus, we've got actual voice and email alerts. So if you have a buy on a stock like Facebook, it would say buy Facebook on the RMO. So that's the beauty of it. It actually talks. It's like a human voice speaking out. So voice alerts is a great thing. And the reason why we built voice alerts is, what if I was checking my email while my MetaStock was open on another monitor? What if I was not looking at that power screener at that point in time? Well, I could hear it, right? And if you don't like voice alerts, we've even got email alerts. Well, I should really call it Gmail alerts, because we've configured it with Gmail, because that's what majority tend to use. So you actually get a Gmail alert hitting you saying, hey, you got a signal on this stock and look at it. So even if you're your computer is open, it's going to fire out signals. So I've really thought to the nth degree to give you something which is really groundbreaking, to make a scanner that you don't have to hit the button scan. You just need to open it. It's totally customizable. The strategies are all available. In fact, I'd go out to say there are over 30 different indicator fields that you can configure. So you could even configure, hey, I want RSI overbought, and you may say I want RSI above 90 or above 85. I mean, you can put in a lot of stuff. You want MACDs, ADX. We build candlestick patterns because a lot of people like, let's say a bullish engulfing or morning stars, all of that stuff. We built those different patterns in. So 30 different kind of fields that you can use, stochastic, CCI, the works. And of course, we built all the ATM stuff. That's really what I originally designed it for. And of course, if you, as I mentioned to you, you get 10 indicators, all the templates pre-built, all of them with commentary, 30 different, well, rather 6 experts, which we have there, have the commentary. We've got explorations for each of those ATM studies. And as I mentioned to you yesterday as well, or the last session on Thursday was, we have the integrated buy and sell, which means it'll give you the exact point where all three sink in for a buy or sell. So there's great opportunity here, friends. And we've thought of the nth degree, or, which can help a trader in his everyday decision-making process. So I really believe that when someone uses a tool like the ATM, he's not just using a new age tool, he's using a tool that adapts to the stock and time frame that he or she is trading. So, I keep stating we should power up on technology and focus on the making money, and the managing risk is to reward bit. Concentrate on the trade. Don't, spend so much of time where you become an analyst more and less of a trader. So I think that's the focus. If I had to just sum it up in one sentence, I would say it helps me not just stay disciplined, but also have an efficient and adaptable system to trade off. Thank you, folks. But before we end, I've kept some time in for Q&A, so I'll try and answer a few that I can right away. And over to you, Jeff.
All right. Thanks, Rahul. We have a lot of questions for you. So let's go ahead and get a couple of them here. We had very similar questions. RH and Gert asked a question about using RMO trading methodologies on futures and then Forex, respectively.
I'm sorry, I lost your audio there for some reason, Jeff.
Oh, hopefully that isn't a sign of things to come. The question was do you have experience using RMO on futures and Forex?
Oh, absolutely. I trade futures every single day, right up to Friday. As in last Friday, I traded futures using the RMO system. Well, just to clarify to you, in India, I trade the index futures, and I'm very fond of looking at charts of gold and silver as well as crude oil, but I'm not all that active personally. I'm more an index futures guy because I tend to be more comfortable with that. But totally, it does work with Forex data as well as futures data, yes.
Stephen asked a question about TrendDecider Weekly.
Right.
The curiosity that he has is, let's say that we're looking at a chart on Friday, for example. And I think I know the answer to this question. He wants to know exactly when you'd know the new TrendDecider weekly value for the chart. And I bet that's going to be on a Monday.
Oh, you said it. Absolutely. So the good thing about it is, so I'm assuming that you probably use real-time data from your question. That's what it sounds. Because what it means is every Monday morning, it's going to give you a new weekly level. And every morning, including a Monday, you'll get a new daily level as well. And on the first calendar day of the month, you also get a new monthly level. So they update on the first of each month and every Monday, as well as every day if it's the TrendDecider daily.
There's a few more questions, but I do want to talk a little bit about, there's been a few questions about the additional class that we're going to do. And so I want to talk a little bit about that. Well, basically, on next Thursday, at the same time, which is going to be noon Eastern, we're going to sit down and do a customer section, customer-only training session for the ATM 2.0. So if you're a customer of ATM, whether you're here or not today, you're going to get an invitation to this special class. What we want to be able to do is sit down with you and really go through like the power screener, get into some real details. In fact, I've got a screen here that actually shows exactly what we're going to cover on March 12th. Or March 22nd, I should say. So it's March 22nd, noon Eastern. Rahul is going to be talking about using trailing stops, entry and re-entry models, time frame integration, what time frames you should be looking at and how to look at the dailies and the weeklies, I assume. Particularly option trading strategy was actually a question that came up. And I'm trying to find it real quick on the list here, but somebody said we should do a class on option strategies. We're going to do one for you. So, and then exploiting the power screener. Now, this is a customer-only class. We really want to kind of get into the nuts and bolts, and we want to reward the customers that have ATM 2.0 and that have been using it, and we want to also encourage you to try it. So this hour-long class, we could probably charge for it by itself, but what we're going to do is actually make it available to anybody that's a subscriber to the ATM 2.0 product. So if you don't have it, normally you could come in, you could buy it off of our website. It would cost you $129. The special that we're doing as part of the webinar is you pay $99 per month, and that's a permanent discount. So you get $30 off every month that you subscribe to it. You'll also be qualified for that free class that we're doing on Thursday. And I'd recommend you try it. There's not a lot of risk here. I know a lot of you, 88% of you, according to the polling we did, already have MetaStock. So this would be a great way for you to kind of try out this model. It's going to work for you, but if you don't like it, you can actually just cancel your subscription, and you still get to go to the class. You get to try it for a month. It's going to work well for you. The other thing that Rahul is kind of throwing in is if you pick up a new subscription to the ATM 2.0, they give you a bit of a discount on it. It's $1,069 a year. But as a bonus, he's actually going to have one of his support staff actually sit down with you and help you get it all set up and running, show you how to use the power screener in a one-on-one environment. So we do have several people here today that can kind of help answer questions that you've got. But to take advantage of that, what you want to do is you want to give us a call, 800-882-3040. Will work from US and Canada. If you're international, you can chat online with us for free at metastock.com/saleschat. So try it out. There's not a lot of risk there. You can actually kind of see how you like it. It is something that's going to be extremely beneficial, and you're going to love it. So 1-800-882-3040 or metastock.com/saleschat. Let's take a few more questions. Let's see, where did I leave off over here on this question list? Did you have anything you wanted to add, Rahul?
Oh, I would, further encourage users who are not using the ATM to try the ATM, because the other thing which I was mentioning is when you start just with using the ATM RMO, it's just such a natural extension, because with that super filter, it's going to be so easy for you to jump onto understanding that. And as I was mentioning earlier, the commentary is something which would definitely help you through. Now, you did mention about options. There were a lot of questions. I'm someone who does a lot of options as well. You pretty much can understand that I trade a lot because I trade a lot of segments as well, but it's not that I have to take a trade every single day. But I do a lot of options. I do, several strategies on it. And one of the tools I would recommend you look at for options is the ATM RMO 2 template. So if you're an options guy, go through the manual on the ATM RMO 2. And yes, as we mentioned, we will be touching on that as well in the pro class. So very, very interesting strategy for you option folks there.
All right. So this is Susan asked a question that I'm somewhat interested in as well. She wants to know what other indicators that you use that are outside of ATM 2.0.
None.
Hey, that's a good answer. Steve asked a question. Should we use the original RMO signal and RMO2 superfilter signal to double confirm each other's signal?
You know, I think it comes naturally that way. If you asked me that, I'll probably break up the question into two parts. If you just use the original RMO, you tend to be in the risk of whipsaw. So I definitely want to use the ATM RMO template as well. Unless you're in a very trending chart. If you're in a very trending chart, well, every indicator is going to work beautifully. So I would encourage you to use the ATM RMO as your primary driver, and probably put a little more trade on if you have the conventional one going with you. So yes, I kind of split up my trades at times and like to go that way. But the second part to that is one big hint that I'd give you is if you're someone in that time frame of an hourly chart or a daily chart, start using the TrendDecider weekly. I mean, they're just so amazing when you put them together. So I kind of like to look at a combination of when I have the original RMO, the TrendDecider weekly, and my Superfilter kicking in. It just works so beautifully. I've been doing it for years now, and I think I've been fairly successful with it. And I don't measure success with just hit trade. I want to make sure that the right trades are really giving me a nice, neat profit, not just a 2-3 bar kind of movement. You know, I look for at least a nice 20-30 bar movement at least.
Susan asked a question. Would you consider yourself a day trader, a swing trader, or both?
Call me what you want, but I use an hourly chart.
Well, what would you call yourself?
I'm a swing trader.
Okay.
I like to think of it as swings because typically my trade length is somewhere between a 2-day to a 5-day window. That's my typical trade length on my on my active portfolio, and I do look at the end of day or the daily charts for my more of my investment portfolio. So yeah, I kind of handle two different accounts there.
Now, Stephen asked a question about the power screener, and he wants to know exactly how many stocks you can put into it before it starts to get bogged down. From my experience, you can put quite a number of them in it. I've never really seen it bogged down, but do you have a different answer?
So the power screener, I mean, it's a great question, Stephen, because the power screener is a very powerful app because it does quite a bit. Imagine churning every second. It's churning real-time data, or for that matter, even end-of-day data, every second that it's there, and making sure it's scanning all those different indicators, which may be based off different time frames. And besides, you could have multiple pages open where you could have one page for the Dow, the second page for maybe futures markets, third page for another foreign market you're looking at. So it really doesn't stress down if you give your computer, if you have a computer which has good resources. And when I say good resources, nothing really fancy, 8 gigabytes of RAM, an SSD disk, which is pretty much standard off late. So that's all we need. And to give you a number to it, we stress tested it with about 500 symbols, and we were quite okay with it, with that kind of a configuration. But if you do move up to, let's say, 16 gigs of RAM, you might be able to do up to 1,000.
Okay, let's see. I was actually typing.
I probably would end that question say that if you really want to make big money, have 20 in the list.
Okay. One of the things I forgot to mention is we do. I know most of us are MetaStock users, which is why I forgot to ask this. But if you don't have MetaStock right now and you want to get it, well, thank you. That's number one. Number two, we'll actually throw in a free subscription to MetaStock with your RMO subscription. So that allows you to try everything out for $99 for a month. If you like it, then it's almost like, okay, am I getting a return on the investment, right? So we'll go ahead and throw that in because we are confident enough in ATM 2.0 that you're gonna be really satisfied with it. So let's see, where did we leave off here in the questions? Forex, Hugh asks, where with Forex, with the volume being reported differently, he actually said there's no volume, but we actually do count trades with MetaStock. We just don't count the volume. But do you handle that any differently, Rahul?
Yeah, so if you're looking at Forex data, just a couple of things which I would recommend. The reason why there's a slight difference in the way you look at Forex data is the volume. I don't use the SWI on the Forex data because in Forex there's really no one exchange. There's just so many. You could be with FXCM, GFT, or whatever. I mean, there's just so many names over there. Everyone's like their own little mini exchange. There's no such perfect Forex price because different providers could have mildly different prices. So I won't use the SWI. I won't use the zone detector that extensively there too. I'd probably like to use stuff like the TrendDecider and the Superfilter, I think, to start with. That's really what I'd recommend for you. So try and stay away from very volume-driven tools and be more into momentum or price-driven tools.
Now, I think you answered this in the initial during your presentation, but him, Mr. Singh, we'll go with that. Do you have a preferred time frame for intraday trading? And I think you said hourly.
Honestly, there's no perfect time frame for anyone. I covered this a lot in my live session. So probably whenever we do the next live event, in-person event, that is, I do talk a little bit on the time frames. But to try and give you a quick roundup on it, there's no perfect time frame that I can tell you to trade. It's more about you finding out what time frame you're comfortable with and sticking with that one time frame. So maybe if you're kind of in a state of limbo thinking is hourly for me or 30-minute for me, do each one for a month and see which one you're adjusting to better. It's not just about the indicator's performance, it's also about how you can adjust and adapt to the time frame. For some people, a 5-minute or a 15-minute chart is just too fast for them. For some people, they're quite happy handling a 2-minute chart. For some people, even if they can handle a 2-minute chart, the return in terms of dollar value is not good enough. So you need to find your space there and do a little bit of working. But I think the hourly is a good place to start with. That's a nice point to be looking at.
Okay. Brian says, I'm totally new to this system. How can I quickly gain the understanding to use this system effectively?
Brian, I think one of the best things about it is the answer of your question is in the name, automated trend modules. So the idea is if you're new, it's automated. You've got the commentary. You've got the two things I want you to start with is the Superfilter and the TrendDecider. And then, of course, there are all those other models, depending on what you trade, which I use. But then maybe these are two good starting points for you. And then you progress down with the Breakout Catcher, etc. So it's quite automated. Probably a week or two of practice should get you in sync. Now, a lot of people who are very advanced in trading as well still want the automated trend modules. And why is that? Because when you get too advanced, it also becomes too complicated and you just need to take out a lot of the noise and get something which is very visual, very focused, very hands-free. And I think that's one of the advantages with the ATM. So I'd urge you to give it a shot, not to worry about it. I think probably it's one of the easiest systems to use. There's not much to to draw or to change values or to tussle around with. I mean, I can understand if you're trying to find an RSI divergence, you could find many different divergences and confirm that with averages and different frames. But here it's a lot more adaptive and mechanical, if I could put it that way.
I'd also add that we are probably going to put together a special class for users next Thursday at noon Eastern that you can go to. If you happen to be busy at that time, we'll record that session, but we're going to actually kind of help you get up to speed with it there as well. Okay. I think one last question, unless another one comes in. Rahul, you've been a great sport. What happens if the RMO changes to blue, but Superfilter doesn't change? Is a superfilter more accurate for daily trading? Oh, those are two different questions.
Okay, well, could you just read out the whole question, then I'd
Yeah.
answer both of them. Yeah.
What happens if RMO changes to blue but superfilter doesn't change?
Okay.
Which one is more accurate for day trading or daily trading?
Right. It doesn't really matter to me. As I told you, I look at end of day daily charts as well for my investments, and I look at the 60-minute for my kind of trade portfolio. So it doesn't really matter to me what time frame you trade. So I would once again remind everybody not to get too worked up about the time interval that you're looking at. It's more the concept and the rules we need to focus on. But to answer your question, if the bar colors turn into blue, remember the bar colors are the superfilter. So if the superfilter has turned ahead of the RMO, you can go ahead with it in a small way and then add on to it when the RMO as well kicks in. But if it's a situation where the RMO has turned into a negative zone, but the superfilter is still staying blue, I would go with the superfilter. So the superfilter has the edge, so do give the weight to that.
Okay. To sum up again, sign up. $99 per month. That's a permanent $30 discount. If you pay for the year, you'll get a bit of a discount. I quoted 20%, but it's not quite 20%. It's $1,069 a year, which is, I think, about a 15% discount. But you can do the math if you want to. If you purchase that annual package, you'll receive one training with Veritech support staff. And as we've been talking about, we're going to sit down with you Thursday at the same time and go through kind of how to use the power screener, how to use it with some different option trading strategies, timeframes to use, entry, re-entry models, and exploiting the power screener. So it's going to be a great class. It's probably worth $100 by itself, if not more. To take advantage of that, give us a call at 800-882-3040. You can also, if you're international, that number is not going to work, but you can chat online with us at metastock.com/saleschat. Give it a call, give it a try. It's a great package. We have customers that love it. So try it out. Patrick says to go. Thank you, Jeff and Rahul. Great session. Much appreciated, et cetera, et cetera, et cetera. And Nestle says, can I cancel the annual subscription if you don't like it? Nestle, what I would say, because the annual packages that we have are not refundable. So if you're a little bit unsure and a little bit on the fence, do the monthly subscription until you're sure that you like it. So that's a great question. Anyway, give us a call, 800-882-3040. Chat online with us at metastock.com/saleschat. Do you have any final thoughts, Rahul?
Well, my final thoughts are, I hope to see you guys on Thursday, because I've really got some interesting stuff coming up that class, and I'm pretty sure each one of you, no matter what you trade, are going to enjoy the practical frankness which I come out to you with. As I told you, I'm very rule-based. I'm very to the point. I like to give you my thoughts on where I'd buy, what my stops are, how I'm looking at stocks, how I'm selecting them. So it's going to be fun on that next session. So I'd urge you to be there. I thank you for your patronage. Thank you for being here today as well, and greatly appreciate your time. I think it's a positive step in your trading. I hope I've been able to add some value to it. So thank you once again. Thank you, folks. Thank you so much, Jeff, for being there. You guys do an awesome job.
Thank you, Rahul. Talk about awesome job. I really appreciate the class. Both Thursday was awesome and today was really, really good as well. So thank you. For those of you that are here and that came and spent an hour and a half on Saturday with us, I want to say thanks. What a great, I hope it was worthwhile for you. And as always, we'll see you at the next class.